What if I told you the way your financial advisor gets paid can literally determine whether or not you'll be successful when it comes to managing your wealth? I'm Tyler Gray, founder and principal financial advisor here at Sage Oak Financial in Tulsa, Oklahoma. And on this week's episode of Ask an Advisor, we're going to answer a question I get on a regular basis from folks, and that is, how do financial advisors get paid? Or more typically, how does my financial advisor get paid? Well, we're just going to jump right into it. There are really only three main ways that a financial advisor can get paid. And of those three ways, there's only one way that I think is in the best interest of the client. So what are they? Well, the first way that an advisor can get paid is on a commission basis. Now, the way this typically works is that when an advisor sells you a product or recommends a service or product, they'll get a kickback from that product or service provider. For example, when you invest in a mutual fund through a commission-based advisor, you may get charged what they call a load, and basically that's a front-end load, which is a commission you pay when you buy the fund, or a back-end load, which is a commission that you pay when you sell the fund. The other way an advisor could get paid might be from selling you a life insurance policy or an annuity product. Those are two of the higher-paying commission products typically for the advisor, meaning they're more expensive for the client. And the other way an advisor might get paid is on a transaction basis in your account, as is the case with a lot of stockbrokers. So that's the commission side. The second option for an advisor to get paid is a fee-based, or commission and fee is what it's typically called. Now the way these guys get paid, or these advisors get paid, is that they can either get paid a fee directly by you, they can get paid a commission, or they can get paid a combination of commissions and fees. And that's why it's confusing for a lot of people, because it sounds a lot like the third option, which is fee-only. Now fee-based and fee-only sound very similar, but fee-only is very, very different. The only compensation a fee-only advisor receives is compensation paid by you, the client. Now, there are several ways that they can pay you fees, or the client can pay the advisor the fee. And one might be an hourly rate, like you pay a CPA or an attorney. Another way you can pay a fee-only advisor might be a percentage of your net worth, like we charge here at Sage Oak. And another way that is very common is to charge a percentage of assets under management, or a percentage of the assets that they help you invest. So a common fee structure might be 1% on the first $1 million. Now, I really like the fee-only model because it removes a lot of the conflict of interest that are inherent in the other two models. For example, I can't imagine going to a doctor who got a kickback from a pharmaceutical company for every prescription that they wrote. I'd always wonder whether or not the prescription that they're recommending was really the best prescription for me, or if it was the best prescription for them in terms of did they get the best kickback from that prescription. Now the thing is that's the way many advisors work, at least the commission and fee-based advisors. So that's one of the issues that I have with that model. The other problem with the fee-based and commission-based models is that it's very difficult for a lot of clients to determine how much they're actually getting charged. I remember a story one time. I was talking to a guy, a prospective client, about his current financial advisor, and towards the end of the meeting, the individual said to me, the gentleman said to me, he says, "You know, Tyler, I'm not that happy with the level of service I'm getting from my current advisor, but at least he doesn't charge me anything." And this just floored me, because I couldn't believe he actually thought that his advisor's services were free. But the more people that I talk to, the more I realize that that's very common. People don't understand that their advisor's services are not free, and they're actually getting charged, at least not directly, but they don't realize they're getting charged when they're a commission or fee-based advisor. But you know, something we all learned in kindergarten or first grade was that there's no such thing as a free lunch, and everything costs money. So what does all this mean for you? To sum it all up, it means that when you're looking for an advisor, you should look for two key things. Number one, you need to look for an advisor who pledges to act in your best interest. And number two, if possible, try and find an advisor who operates on a fee-only basis. If you follow these two principles when searching for a financial advisor, you'll be much more likely to find someone who can help you successfully manage you and your family's wealth. Again, I'm Tyler Gray with Sage Oak Financial. Thanks for watching this week's episode of Ask an Advisor. If you have any questions about this or any other topic related to managing your wealth, feel free to email me anytime at tyler@sageoakfinancial.com. Thanks for watching, and we'll see you next time.